Hi friends, welcome to Affairscloud. Okay friends, you can access Affairscloud by downloading our app, and we can through our app you can learn various things like current affairs, and you can prepare for banking and insurance exams, also for SSC, railways and UPSC. You can prepare for various exams, and you can also log in through websites, and where you can use to log in your Gmail ID to log in, and you can access our app. And we have also several offers going on which will be very useful for you. So kindly download the app and get benefited to the maximum extent. And in our site and app, we will be having like current affairs itself. We will be having like banking, and separately you can do for banking, and separately like current affairs for separate exam wise we will get it. And even you will get like state wise current affairs which will be very useful for you. And there are also topic wise content like English, reasoning, quants, everything. There will be like topic wise which will be very helpful for your preparation. See, in this we can also get weekly current affairs also. So like daily you can prepare current affairs, and weekly current affairs you can revise it. See here you are getting daily current affairs also. So kindly download the app and make use of it. Okay friends, now we are going to see banking related current affairs of 6th November 2023. Okay, first current affairs, it is about non-callable TDs. What are this TD? TD means time deposit. Time deposit means like for a fixed period of time the money will be with the bank. That is called time deposit. Example for time deposit are FD, which stand for fixed deposit, and RD. Okay, now let's see this current affairs. RBI ups minimum amount for offering non-callable TDs from 15 lakhs to 1 crore. What it is like RBI actually, what is, first we will see this non-callable TDs. What is this non-callable TDs means? Non-callable means like say you are investing one some amount. Non-callable means sorry, if you are investing some amount for 5 years, you cannot withdraw or close that or premature close that FD before that 5 years. That is called non-callable, which means if it is deposited for a particular year, you cannot close or premature close the TD before the expiry of that period. So before it was like 15 lakhs. That non-callable TDs will be from 15 lakhs rupees. Now that non-callable TDs they have increased to 1 crore. Okay. So before it was like that non-callable means we cannot premature close that FD. No. So minimum amount it was like from 15 lakhs the non-callable TDs was there. Under that product you can invest from 15 lakhs itself. Non-callable TDs are there. But now that non-callable TDs they are made as 1 crore. So now minimum that non-callable TDs are 1 crore. Okay. So by this what it is see, it will allow all customers to prematurely withdraw money from fixed deposit up to 1 crore. So now since they have made that minimum amount for non-callable TDs are 1 crore, no, so up to 1 crore you can premature close now. And this mandate it's for all commercial banks and cooperative banks also. Okay, and this instruction is applicable for NRE, non-resident external rupee deposit, and ordinary non-resident deposits. What is this non-resident NRE, non-resident external and non-resident ordinary? See, it is simple. External, no. If a non-resident earns money outside India, that money will be deposited in external. So outside India they are earning, and it is coming inside India. So it is, if the money is earned outside India, it will deposit in non-resident external. And if a NRA is earning money inside India, it will be deposited in NRO account. Okay, it is simple. External means money earned outside. NRO means money earned inside the country. And for that deposit maturity, no, bank can set their deposit maturity. But for NRE term deposits, at least 1 year minimum, it is 1 year. It should be there for 1 year. And for NRO term deposit, it be monthly at least 7 days. This is the minimum tenure for NRE and NRO term deposits. Now it is about a task force. Okay, who has set this task force? Task force is IRDAI, which stands for Insurance Regulatory Development Authority of India. They have formed a task force under the whose chairmanship Meena Kumari, who is executive director of IRDAI, to review the existing bank assurance framework. Now we have seen what is this. We will see what is this bank assurance. Bank assurance means it is basically like bank and insurance company. They both will join and do the insurance business. Basically, this insurance company will use the bank's help for selling their insurance products. That is called bank assurance. So, bank plus insurance, they both join and do insurance business. That is called bank assurance. To review the bank assurance framework, this committee has been formed. And there must be a reason for forming this task force. No, what are all the reasons we will see? First one is mis-selling or forced selling. What is this mis-selling or forced selling? What is the difference? Okay, mis-selling. Mis-selling means like wrongly selling a product. Like if a person does not need that life insurance, but if we are selling that product, even if it does not need, that is mis-selling. Or another one is like mis-selling. Okay, what I told, like if it does not need and if he is selling it is forced selling. Okay, but mis-selling means like if he needs a product but we are giving another product what he didn't ask. So if he does not need and if we give a product to him, that is called forced selling. And mis-selling is like he needs a different product but we are giving him a different product by giving wrong data to him. That is called mis-selling. To review this, they have set this task force, and they have set this task force to increase the efficiency of this bank assurance. Okay, and they are going to examine the international practices and suggest suitable changes, because they are going to study how international practices bank assurance is there, and they are going to examine that and they are going to suggest suitable changes to our bank and insurance companies also. And this recommendation should be submitted within 31st December 2023. And now we'll see the members of the task force. First one is Yegna Priya Bharat, who is CGM Health of IRDAI. Second is Surya Kumar, who is CGM Supervision of IRDAI. Third is J. Anita, who is CGM Intermediaries of IRDAI. And fourth is D.S. Murthy, who is GM Non-Life of IRDAI. And there will be also representative from bank also, no? Bank and insurance companies also. Which are all the bank? Representatives from SBI, HDFC Bank, Punjab National Bank, and New India Assurance Company Limited, ICICI Lombard General Insurance Company Limited, Tata AIA Life Insurance Company Limited, HDFC Life Insurance Company Limited, Bajaj Allianz Life Insurance Company Limited, Aditya Birla Health Insurance Company Limited, Cholamandalam MS General Insurance Company Limited. So this, along with them, these are all the representative from bank and insurance companies. And we will see about this IRDAI. Who is the chairperson? It is Debashish Panda. Headquarters is in Hyderabad, Telangana. It is established in 1999 and it is incorporated in 2000. This is about IRDAI. Now we are going to see about RBI has issued norms to regulate this PACB. And they have imposed some monetary penalties also. We will also see that in this upcoming slides. First, what is this PACB? PACB means Payment Aggregator Cross-Border Payments. Cross-border means like from our country to any other country. If payments are made, and for facilitating that, somebody will be there. No, they are called Payment Aggregator. Okay. What now they have done is RBI, they have decided to bring this payment aggregator under their direct supervision. Okay, see here, RBI has include all entities facilitating cross-border payment transactions for put under the direct regulation of RBI. So basically, this PACB, they are bringing it to direct control under regulation under RBI. And what they have told us, all this non-bank like non-bank which provides PACB, payment aggregator cross-border payment service. Like if other than banks, if anybody is providing these services, they must apply for authorization from RBI by April 30, 2024. And to apply that, some criteria should be there, no? Because everybody cannot apply. So some criteria will be set by RBI. What other criteria? See here, non-banks providing payment aggregation, payment processing service, they must have a minimum net worth of 15 crore during application to RBI. So when other non-banking companies which are providing this payment aggregator cross-border services, they should have minimum net worth of 15 crore when they are applying for application to RBI, and they need to increase their net worth to 25 crore by March 31st, 2026. And some other conditions also they have put. See, all non-bank payment aggregator cross-border should register with Financial Intelligence Unit as a prerequisite for seeking authorization from the RBI. Why this much stringent policy is they should not use this PACB. People or anybody should not use this PACB for money laundering. That's why they are telling to register that under Financial Intelligence Unit also, because they will be monitored closely here. And existing also, generally existing payment account also, they should get approval from RBI for cross-border payments. And if in case they have not applied and they have not got their licenses, they should stop their operations by July 31st, 2024. If they are unable to meet the requirements or apply for authorization, they should stop their operations. Basically, what RBI has done is they have made some stringent conditions for this payment aggregator cross-border payments to stop money laundering and various other reasons also. And we will see the penalty. RBI has imposed a penalty on some banks. We will see the reasons and why they have got penalties. First is Punjab National Bank. Penalty amount is rupees 72 lakh. Reason is non-compliance with certain provisions of RBI interest rate on deposit directions. Like RBI has some conditions for this interest rate on deposits. Since Punjab National Bank didn't follow that, they have been put penalty of 72 lakhs. And Federal Bank, they have put penalty of 30 lakhs. Reason is because they have not followed non-compliance with KYC directions 2016. They have not complied with KYC directions. Hence, they have put 30 lakhs penalty. And Cosamatam Finance Limited, they have put penalty of 13.38 lakh. Reason is they have not followed the certain provisions of the non-banking financial companies. They have not followed the rules prescribed by the RBI. Okay. Then Mercedes-Benz Financial Services, they have got penalty of 10 lakhs because they are not complied with the KYC norms stipulated by the RBI. And L&T Finance Limited, penalty is 2.50 crore, and the reason is non-compliance with certain provisions of the NBFCs. So these are all the penalties made by RBI on the NBFCs and banks. And about Reserve Bank of India, who is the governor? It is Shaktikanta Das. Deputy governors are Swaminathan Janaki Raman, Michael Debabrate Patra, M. Rajeshwar Rao, and T. Rabi Shankar. And it is established in 1st April 1935. Headquarters of RBI is in Mumbai, Maharashtra. Next, it is about a life insurance company has launched a plan. We are going to see about that. What is it? Life insurance company name is? It is Ageas Federal Life Insurance Company. They have launched a new non-linked participating individual life insurance savings plan called Ageas Federal Life Insurance Super Cash Plan. Okay, basically they have launched a new plan. It is life insurance and it has savings plan also. First, we will see this company, Ageas Federal Life Insurance. It is a joint venture between Ageas. It is an international insurance giant based out of Europe, an Europe-based insurance company, and our country's Federal Bank. It is a joint venture between these both companies, Ageas, an international insurance company, and Federal Bank. And now we'll see about this AGS Federal Life Insurance Super Cash Plan. The scheme is a combination of, see, all three it will be there. Life insurance they will give, guaranteed returns will give, and regular income. See, all the three is there. Like, see, protections, life protection also they are giving, and after that, returns also they are giving, and regular income also they are giving. So it is like a all-in-one plan. What the scheme offers is, the scheme offers the immediate cash flow starting from the end of first policy year or month, and there are also provision for boosting guaranteed boosters starting from end of the every fifth policy year till the end of the policy term. Additionally, the scheme is also offering a lump sum maturity benefit at the end of the policy term. And if the policy holder is a female, the sum assured on maturity will be increased by percentage of the annualized premium. See, if it is like others, it for male it is one means, for if the policyholder is female, by it will be increased by a 1, which means 2% it will be written on the annualized premium. So basically, AGS life insurance, federal life insurance has launched a plan which is like, it contains all the characteristics like life insurance protection, guaranteed returns, and regular income. And it is about a ICICI Prudential Multi-Asset Fund. It is basically a fund. It has completed 21 years. Okay, on when it was completed the 21 years, on 31st October 2023, it has completed 21 years. The scheme has been launched on 31st October 2002. Okay, first we will see what is this multi-asset allocation mutual fund. See, they are this hybrid funds, like they must invest a minimum of 10% in at least these three asset classes. Which three asset classes? To reduce the risk, they must have a combination of, they must invest in equity, debt, and one more asset class like gold, real estate, etc. So what basically they are doing? They are doing diversification. What is meant by diversification? Diversification means spreading the risk. See here what they have done. First they invested in equity, debt, and one more asset class like gold or real estate, etc. So if diversification is there, means what will happen? The risk will be less. Okay. This fund has good track record which generates a compound annual growth rate of 21%. So this fund has given a growth rate of 21%, and we have seen what is this multi-asset allocation fund, no? And now we will see this ICICI Prudential Multi-Asset Fund is investing in which and all. See, this ICICI Prudential Multi-Asset Fund, they are investing in equity, debt, and exchange traded commodities, derivatives, units of gold exchange traded funds, or units of real estate investment trust and infrastructure investment trust and preference share. So they are investing in this and all equity, debt, and other one. Other than that, they are investing in any one of this. So basically, what they are telling, this ICICI Prudential Multi-Asset Fund has completed 21 years. Okay, friends, thanks for watching, and don't forget to like, subscribe, and share our channel, Affairscloud. Thank you, friends.